And then the third is the worst houses to buy as investment properties. I met with an investor yesterday. We had lunch, and he works a full-time job, and they have a respectable amount of properties. They've got 6 properties. That's a lot of properties to work up while working a full-time job. But he told a funny story. He said that his wife will sometimes look at him and say, "Hey, can't we just sell all of these and buy in, this Class A area?" And he was like, "Well, yes, we could, but then our returns would absolutely plummet. It would become a negative cash flowing thing almost instantly." So I would say properties in higher priced markets are the worst places to buy as an investment property. Now that's top of mind. I know that there are a significant number of people that make it work, but I would argue that the qualifications to be one of those individuals that can make this asset work in the Class A type is one that is more difficult to be a part of. You're going to have to be a really, really high net worth individual or a very high income individual, one where you're not concerned about the cash flow of the property. You don't mind it being a negative cash flow producing asset. You are either banking on the appreciation or you are either really leaning in to the tax benefits associated with real estate investing, and you want to be comfortable with the neighborhood that that asset class is in. Now, I would venture to say that 99.99% of the people that I meet in life or are watching me on YouTube do not fall in the category of the high net worth individual or the really high income earning individual that is looking at a real estate investment as a means to burn cash to save on taxes. In fact, if I were to meet one of those individuals, I would work very diligently to figure out a different alternative than buying a Class A investment property with the sole intention of banking on appreciation and having a negative cash flow for the sake of saving on taxes. I'm sure this is a viable strategy as there are clearly investors buying Class A properties. However, I think with a little bit of elbow grease, a little bit of some brainstorming parties, we could create something significantly better for that type of person than burning cash in hopes of appreciation for the sake of saving money on taxes. So for me, my personal opinion, Class A investment properties are one of the worst things that you could purchase, unless, of course, you purchased that 20, 30, 40 years ago. Now you look like a genius because you have ridden out that negative cash flow. You have ridden out those tax benefits, and now you're left with a big pile of appreciation. And you look like a genius when you sell it for 10 to 15 times more than you purchased it for. I know a couple of those guys. Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.